The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Just reminding traders, if they're new to this channel or if this is the first time you've seen this video, if you go to this playlist, everything you need is in this playlist as it is titled. We go over the templates, the timings, the levels, the behavior of price. This will help to bulletproof your understanding of the best trade setups in the playbook. Again, these are free videos on the YouTube channel to support and enhance the skills and the development of your trading prowess within the playbook itself. Everything you need is in this playlist. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to review, again, weekly templates, understanding the importance of Monday's opening range, Tuesday's initial balance, Wednesday midpoint range of the week for a day 1, day 2, day 3 opportunity, and then resetting, heading into the closing range of the week. Wednesday again is day 1, Thursday is day 2, and Friday is day 3, heading into the closing range of the week. And Friday's closing range, depending on which day forms the high or low of the week, can set the tone for heading into our new week. We'll look at some specific examples of that today. So the big thing to understand is what type of weekly template am I in? And I want to repeat the phrase, you make money on the days that it's easy to make money on. So although we can get focused on trading our favorite instruments, I encourage traders to focus on trading the best trade setup, the highest probability 90-10 opportunity in the session that you're trading, regardless of the instrument, and getting accustomed to understanding how that sets up over 3 sessions, over 3 days, over 3 hours, and understanding the importance of the high, the low, and the closing price of the day and the week. And as Bill Lipschutz says, if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. So repeating Monday to Friday is a template in a week, regardless of 3-day setups, regardless of 3 days of breakout traders in the market. We are in a template. And whether or not you get focused on what type of behavior one instrument has, that may not be or may be the best instrument to trade. We'll look at some examples of where traders got caught on the wrong side of some markets on Thursday today, and why some traders were caught on the right side of those markets, and understanding how that played out. Because if you understand the template and the opening range and initial balance, and the importance of the high and the low, the timing. Now, I've gone over this in several videos, so if you go back to the playlist, everything you need is in this playlist. I repeat the same things in every video in terms of the timings, the levels, the behavior of price. My focus is 9:30 New York Open. Occasionally, there will be opportunities first hour, as we saw today on gold, heading into the second hour. Parabolic, explosive move that several traders got part of, but also understanding at 9:30 how other instruments can be set up for parabolic reversals or trend trades in a weekly template. So coming back to understanding, we can have breakout traders in the markets. We can have first red day. We'll look at an example of first green day also. And the importance of understanding the inside day. Where is the money? And what type of opportunity lies there? Is it a false break reversal or is it a trend trade? We'll look at the big picture templates and scale down to those session parabolic opportunities. Now, I want to remind traders, my focus is on pump and dump or dump and pump. We'll look at an example of that. It can be over 2 days. It can be over. It can be a 3-day setup that culminates with a 2-day pattern, a lower low, a break in structure, 3 levels of rise for the dump. And that's the trade setup that I'm looking for, the parabolic move. This market can reverse later. It doesn't matter. I'm looking for where is the scalable opportunity
in either a pump and a dump template, whether it's a 3-session setup, a weekly template, a 3-day setup, a low of day, high of day opportunity, whatever that may be. But these parabolic opportunities that build over the course of 3 days, 3 hours, or 3 sessions, for a parabolic scalable opportunity, could be 50 pips, it could be 150 pips. If it's a large weekly range, high of week, low of week opportunity, it can be 300 or more pips, depending on the instrument that we identify as a best trade candidate. Reviewing the importance of high of day, low of day, closing price levels. Understanding, most importantly, that other time frame traders are coming in at these levels, whether they are coming in underneath and creating that low of day with buying pressure, or selling on top with selling pressure, or if these areas are going to be targets in a parabolic range expansion, whether that's a 3-session setup, a 3-day setup, an opening range measured move, or a day 3 measured move, where we can target, when a market is in breakout, a full range expansion, and we'll look at an example of that today as well, in a market where traders are trying to counter trend a market that is in breakout in a full range expansion. Looking at the Euro-Oz pair that gave traders an early Asian opportunity to enter into a first green day reversal opportunity. Now let's go back. Simple process. Friday's our closing range of the week. In this particular case, Thursday was our high of week. Monday is our opening range. The market closes and stays inside of Friday's closing range of the week, but not before extending the range, triggering breakout traders above Friday's high. We haven't broken weekly levels. And day 2 goes parabolic in the Asian session, taking out the low of day. Trigger the high of day, run stops on the low of day. Now, on day 2, Tuesday forms our initial balance. Monday's our opening range. Tuesday is our initial balance. And as I've mentioned before, in a large percentage of cases, one of these extremes will tend to hold or be an area that they trade back to if a template sets up. The market breaks out and closes out of balance, forming our initial balance. Initial balance is the first 2 trading sessions in a given time frame, whether that's the first 30 minutes, the first 2 days, whatever that may be, but it closed out of balance. And as Dalton talks about in Market Profile, in Mind Over Markets, a market that is out of balance. Reviewing from Dalton, a market that opens open auction structure out of balance or outside of the previous day or week's range may suggest non-conviction, but the fact that the market is out of balance means that there is a good potential for a dramatic move in either direction. So when it's out of balance, the market may have the potential to move dramatically in either direction. From the open of Monday at the high of our, the open of Monday from the high of our current week, other time frame sellers have been driving this market lower. We close out of balance and trigger breakouts and open out of balance in the Asian session on Wednesday, day 3, the midpoint range of the week. Day 1, day 2, day 3. So again, depending on the session that you're trading, you may have had an opportunity in Asia. You may have had an opportunity for the continuation and low-hanging fruit trade in the New York session. Again, tying in our 3-session setups and also understanding the different opportunities that can present throughout the week in the session that you're trading based on a template for the best candidate in the session that you're trading. So what's a potential signal that this market may be reversing? We may have major red news on the calendar. If you can count to 3 and tell time, as I've mentioned before, you can make a lot of money depending on the instrument that you track. And if you follow a basket of instruments, you should be able to get familiar with flipping through instruments quickly and identifying which pairs may be offering an opportunity. An out-of-balance market on the close may be a signal for the next day to monitor if there is a reversal or trend continuation opportunity on day 3, Free Cash Wednesday. We see Wednesday close as a first green day. And again, that gave traders a signal potentially for looking at that market in the Asian session. and the continuation trade in the Europe-London window, and potentially low-hanging fruit continuation in the U.S. session for taking out not only the high of the current week, but the high of the previous week as well. So again, as I talk about in the playbook, there are two types of templates that I'm looking for: the dump and pump template, or on page 19, the pump and dump template. Sometimes these will meld over 2 weeks. This could be a Wednesday, Thursday, Friday into a Monday, Tuesday, Wednesday. Or we can get a day 1, day 2, day 3 reversal. And then on the back side, day 1, day 2, day 3 for a session scalp, or a better instrument is set up for a larger parabolic opportunity on any one of these days. But each instrument may offer one great trade throughout the week in any given session, depending on the session and the template that you're looking to trade. Now, we had major red news at 8:30 New York time for unemployment numbers, and we saw that after the release, as I repeat, redrawing the levels. If there is any type of explosive move, we can redraw the high of the day. And then we already have an existing thesis for the continuation trade at the beginning of the second hour. So we're already in a reversal, but we're also in a breakout. And so a couple things I'll repeat. We're on the first green day trade that started in Asia. Continuation low-hanging fruit in the Europe-London window. And the low-hanging fruit for the high of the week, high of the previous week in a double distribution type of template on Thursday after the midpoint range of the week. Now, I want to point something else out. Traders, again, I mentioned just because something is up high or down low, understand when a market is in breakout. We're targeting the high of the previous week, but that completes one full range expansion of a high low of the day range, which is a consolidation. We're on the backside of the move, day 1, day 2, and this pair may offer us something in Asia or London tomorrow for either a reversal or a continuation trade. But understand the importance of when a market is in breakout, not to be looking to counter trend something just because it has broken a high or a low. We will look at one other pair today that several traders got caught trying to counter trend in a market that is on a continuation range expansion after breaking out on Thursday. So again, we have a dump and pump template, easy trade for low-hanging fruit in the London and U.S. sessions, as well as the first green day opportunity right out of the playbook in the Asian session. Day 1, day 2, day 3, reset. Day 1, day 2, Friday is day 3. We can look at a similar example on the Japanese yen. Looking at the DJ30, we had a blow off on Wednesday, day 3, back through the high of our week. If we just back this up, the high of Monday, our opening range, a dump and pump into day 3 that blew off in the direction of the reversal through the high. We had a very distinct 3 levels of rise coming into the U.S. session yesterday. A vertical move for the dump and pump. This is a 15-minute chart. And a third level, 1 push, 2 push, 3 pushes into the high going into consolidation. That market broke down, giving a range expansion up top from our Asian session opening range before dumping down and making a lower low on the inside. This was the perfect setup heading into our U.S. New York Open 9:30 a.m. opportunity for a reversal at the high of the week. This was the best setup for a reversal opportunity. The Russell 2000 was a fantastic parabolic vertical move, but we had 3 levels of rise, and then the New York Open at the high of the week. So understand, New York put our low in place on Wednesday before pumping up and putting a high of day in place. Go back and watch the first part of the video and the previous videos on high of day, low of day. Those are made by other time frame sellers and buyers entering into the market. Thesis is other time frame sellers have entered into the market. We have a lower low on the inside. If it pumps up into this level, we may have a sell high opportunity at the New York Open. This is a 1-minute chart, and to answer a question regarding entering these opportunities, I will always look to put a starter in if there is a price action that confirms my thesis. And this is the second minute after the open, 3 minutes after the open, but I consider this opportunity up to 5 minutes into the session for my initial position, meaning that I will allow myself up to the first 5 minutes, if I have a thesis in place, to be adding positions into this market. Then I will go to my longer time frame. Once that thesis is confirming, again, the importance of telling time. We have a new hour about to start. That allows traders the opportunity to position themselves in a game with the thesis being 1 hour down, 2 hours now down potentially, and depending on how fast this market may capitulate down, we may have a 1, 2, 3 in our hourly time frame for a move to the low of that range. New York put the low and the high in place. This is one large box. New York opened up high for the reversal trade at the top of our selling range, where other time frame traders have initiated that selling response for the pump up into sellers and the dump back down to the low of the New York session, where other time frame buyers have come into that market. On our Wednesday, we now witness the same opportunity for other time frame buyers coming in after the 3 hour window and taking out the low of the New York session. Hence, we have a close back up inside of our range for the day. So opportunity for shorting the range, opportunity for buying at the bottom of the range by other time frame traders on the DJ30. Now we're looking at gold, the 1 hour chart of gold. And again, the simple process, Monday's our opening range. We have a large extended range down on day one. Tuesday is an inside day. Remember, we have inside day opportunities in the playbook. Page 69 in the playbook. And then I've also made several videos on the inside day opportunities that are in the playlist. Now Tuesday was an inside day. We had a vertical parabolic move through the high of the week at the New York Open on Wednesday. But as I repeat, once that level is broken, we had breakout traders in the market on Monday's break of Friday's low. Once Tuesday's high of day is broken, we now have a day 1, day 2, day 3, but we also have inside bar traders triggered long into the market. And so the question comes back, where is the money if that fails? We have inside bar traders triggered into the market on longer time frames. And that market also gave a reversal potential first red day, not completely textbook perfect, but a close below the opening price. And in this case, a close below the previous closing price for a first red day potential opportunity if it presents. First red day, page 58 in the playbook. We had our lower low in the London session, break of the low of the day level for the pump and then the dump opportunity heading into our US session window. So as the session's beginning, we are already in the blow off in first red day, targeting at a minimum the low of the inside day. Now we'll go back to the 1 hour chart in a moment. I want to demonstrate to traders the first hour, as I repeat over and over again, puts in a high and a low. If you're not sure about that, go watch the video on gold in the playlist. First hour puts in a high and a low. We had major red news at 8:30. That pins the low of the inside day. We have our new hour beginning right at the bottom of this market. Pin hammer in a market that has broken outside of the low of the inside day. Now, several traders were looking for that vertical blow off to the low of the week. Now, we have the beginning of a new hour. Beginning of a new hour. Timings, levels, the behavior of price. We have a parabolic coil 15 minutes into our second hour for an explosive reversal back into low of day traders. Zero heat, scalable in size. For the traders that took this trade, this was an absolute golden opportunity for an explosive parabolic reversal trade that capitulates into the New York Open. Now, briefly, I mentioned to traders When a market's already gone vertical and we have our New York Open, I just draw the levels. Once the market has put that high in place, this is a 1 minute chart, I just redraw the box. We have pulled back inside of the low of day level. Going to a 5 minute chart, first of all, if we go back to the 1 minute, we can see as the new hour begins, we're into the third hour now, the market reverses 25 minutes into the third hour for a reversal trade back into lower level shorts in the top of the box. Now going to our longer time frame, I mentioned to traders that it has reclaimed the low of day level. What I mean by that is that, as I said to one trader, the easiest way to understand that is that consider yourself to be short at the low of day in the London session, whether it's on the way down at the beginning of the U.S. window, just prior to the U.S. window, you're short at the low of day level. So if we draw a little box here, once it's reclaimed that level, you were in profits, now you're not. They've gone back up into higher level shorts. That box that is formed at the New York Open is our new target for an existing opportunity if traders were looking to continue for the continuation trade. But once we've reclaimed that level, the thesis is they are not going to come back and allow shorts to get out of losing positions. So anybody who shorted that market in the U.S. window in particular, or after the New York Open, shorting it back down is now caught underwater. If we bring this down to our highest short, all those shorts underneath of the highest shorting bear candle are now underwater. Is this market reversing? I'll just take a short look here. We have a market that has now reversed off the inside day. We have a higher high on Wednesday, our midpoint range of the week. This could be a pump and dump back down to the low. We'll know when we come to tomorrow's U.S. session, because we'll either have been making higher highs for a dump and a pump, or we'll pump up and break down with lower lows for the pump and dump back potentially, maybe through the low of the not only the day but the low of the week. Time will tell. 3-session setup opportunity. No major red news on the calendar tomorrow in the U.S. session. If it's inside and there's nothing clear, I will avoid this market. But if it gives us a clean template for a well-engineered chart, either a pump and a dump or a dump and a pump, this could offer us a parabolic opportunity to either take out the high of the week or the low of the week. Now we're looking at West Texas. You could look at spot crude. It doesn't matter. This is an important chart to understand for traders that got caught on the wrong side of this market today. Again, the importance of opening range, initial balance. We had a range expansion on day 2, higher highs. So we closed out of balance. Go back and review those. There's plenty of videos where I talk about out of balance markets. It closed outside of the opening range. Day 1, day 2, day 3. Again, expanding the range on the upside. No parabolic reversal, no parabolic trend trade on day 3. Hint, hint, hint. Understand what I just said. No parabolic reversal or parabolic trend trade on day 3. The market has closed outside of the opening range. We've had first green day. We've taken out the highs of each day without pulling back. Our closing range of the week has not been taken out. The market is coiling sideways. Coiling sideways after a day 1, day 2, day 3. We have day 1, day 2. This is our third day now of breakout traders in the market. So just to correct a couple misconceptions with traders, this first green day on Monday, there are no breakout traders long in the market. The first day for breakout traders is Tuesday. The second day is Wednesday. And the third day, of course, is now Thursday. 3 days of breakout traders in the markets. So immediately traders assume this has to be a reversal trade, except that we're in a parabolic opportunity and we are clearly not in a reversal setup. The market opens up out of balance. It opens up out of balance, and I remember what I said earlier. The market is in breakout on a breakout day. It did not break out on day 3. We are in breakout. We could potentially now be in a range expansion in the long direction. We've broken out of the high of the closing range of the week. We have a dump and pump parabolic template in a market that is now in a range expansion in breakout. This is not a false break. This is not a reversal setup. This is a parabolic blow off in a market that has broken out. As I mentioned, oil opens at 9 a.m. This is the 9 a.m. We're in a breakout market. This market is very similar to the S&P yesterday. Did not dump at the open, but we were already in breakout for a parabolic range expansion. We had oil inventories yesterday, and remember, I just had the 1 hour chart up. This market is not a 5-minute trade. This trade setup is driven by other time frame traders with an entry at the beginning of a new hour at the oil opening market time of 9 a.m. This market continued strongly for a full range expansion and is still going higher. So coming back to the 1 hour chart, understand the larger templates. Day 1, day 2, day 3, this market is out of balance, but also in a parabolic channel. It's already made a peak formation low underneath of closing price on the day and gone higher. This is not a pump and dump reversal template. Understand that. And this is why traders get caught. We are in breakout already when the market opens. This is not a reversal template. This is a parabolic trend trade opportunity driven by other time frame traders. Very important to understand these templates, and congratulations to traders who hit this trade today. A fantastic opportunity. Sometimes a difficult market to trade once it's already broken out. But again, the entry is right in time on the timing window with a new hour in line with our range expansion already in place on the 4th day of the week. Day 1, day 2, day 3, coiling in an opening range breakout underneath the closing range of the week for a parabolic explosive opportunity on Free Cash Thursday. So study the templates, traders. Step back, be patient, understand the importance of timings. Do not chase candles. Do not chase little pushes. Understand the high and the low, the closing price, and the timing window. 1% better every single day. It's been a fantastic week. Congratulations, traders. Keep getting better. No matter what happens, 1% better every single day. And to the traders that are hitting these trades, rinse and repeat, scale them up in size. The game does not change. These setups, rinse and repeat over and over and over again. They are in the playbook. There is nothing new under the sun. If you can understand 1, 2, 3 and tell time and understand Monday, Wednesday, Friday, there is no easier way to break that down. There's no easier interpretation. Everything else is fugazi. Study these setups. Learn to execute them in live time. Manage yourself. Manage the trade. Get paid. And get off the screen. Have a great day, and may the markets go with you.